We're seeing some massive signals that an explosive alt season is just around the corner. While Bitcoin is consolidating near its all-time highs, experts are pointing to the trillions of dollars sitting on the sidelines, just waiting to flood into the crypto market. At the same time, the strange lack of retail excitement, with the fear and greed index sitting at a neutral 52, suggests the real mania hasn't even started yet. Big players are making their moves, with one billionaire investing over $1 billion into Solana and another firm using XRP for real-world payments across thousands of pharmacies. This isn't just about price predictions anymore, it's about real adoption happening right now. With the Federal Reserve expected to cut interest rates, many analysts believe we're in the calm before the storm. The big question is, are you prepared with a solid profit-taking plan before the market goes parabolic? In the latest video from Altcoin Daily, billionaire investor Dan Morehead of Pantera Capital gives his thoughts on where Bitcoin is headed. He sees Bitcoin's price potentially reaching $750,000 within the next 4 to 5 years, based on its history of roughly doubling each year. While he doesn't see $1 million Bitcoin in that time frame, he thinks it's possible within our lifetimes. The conversation in the video presents a compelling snapshot of the current dynamic between Ethereum and Solana, which many see as the primary battleground for Layer 1 supremacy. Dan Morehead's significant $1.1 billion bet on Solana through Pantera Capital is a strong signal of institutional conviction. This isn't just talk. Converting a public company into a Solana treasury vehicle is a strategic move to bridge traditional finance with the crypto world, potentially unlocking a new wave of capital from investors who prefer familiar investment structures. In the latest video from Crypto Rover, the host explains that the market is currently in the calm before the storm, with major volatility expected due to the upcoming FOMC meeting. He points out that Bitcoin is forming a bull flag pattern after establishing a bottom, signaling a potential move higher. He's holding his long positions and identifies a key resistance level that, once broken, could send Bitcoin toward a target of $123,000. The ultimate price target for his current trades is $137,000. The video also touches on the FOMC's expected interest rate decision, with a 25 basis point cut being the most likely scenario. Historically, these meetings cause a brief dip followed by a significant rally. The host also mentions the release of the dot plot, which will provide insight into the Federal Reserve's future outlook on interest rates. He concludes by noting that, based on historical cycles, the current bull market may have about 6 weeks remaining. The video's focus on the FOMC meeting as a major catalyst is timely. The market is indeed anticipating the Federal Reserve's first interest rate cut since late 2024, with a 25 basis point reduction largely priced in. Current Bitcoin prices are hovering around the $116,000 mark, showing some upward movement over the past week. This aligns with the video's technical analysis of a consolidating pattern priming for a potential breakout. The August CPI data came in slightly higher than the previous month at 2.9%, which keeps inflation as a talking point for the Fed, but the consensus remains that a rate cut is imminent to address a softening labor market. The prediction of a dip-then-rip scenario following the Fed's announcement has historical precedent, as markets often react to the certainty provided by the decision itself and Jerome Powell's subsequent commentary. Institutional interest remains a significant factor, with Bitcoin and Ether ETFs seeing substantial inflows throughout 2025, which provides a strong underlying bid for the market. While corporate treasury adoption of Bitcoin seems to be cooling slightly after a peak in mid-2025, the overall institutional framework is more robust than ever. The video's price targets of $123,000 and $137,000 are ambitious but fall within the realm of possibility if the market experiences a strong risk-on rally post-FOMC. In the latest video from the Crypto Tips channel, the host explains a practical strategy for taking profits in a euphoric crypto market called laddering exits. The main idea is to avoid the emotional traps of greed and fear by setting predetermined price targets to sell portions of your holdings. Instead of trying to sell everything at the absolute top, you sell incrementally as the price goes up. This method helps you lock in gains and prevents the regret of riding your portfolio all the way up and back down again. For example, if you bought Bitcoin at $40,000 and it's now over $110,000, you could set targets to sell 20% at $120,000, another 20% at $150,000, and perhaps 10% at $180,000, leaving a small portion for a potential moonshot to $250,000 or higher. To set these targets, you can use technical analysis tools like Fibonacci extensions on platforms such as TradingView. The host also stresses the importance of considering the tax implications of each sale, as each transaction is a taxable event. Keeping good records is essential, and tools like CoinTracker or Coinly can help. The core message is that having a clear, emotion-free plan is what leads to long-term success in the crypto market. The laddered exit strategy discussed in the video is a timeless and disciplined approach, and it's particularly relevant in the current market. Bitcoin is currently trading around $116,000, which is a significant increase over the last year, creating a lot of unrealized gains for investors. The market sentiment is currently neutral, sitting at 53 on the Fear and Greed Index, which suggests that the wild euphoria seen at market tops isn't here yet. But neither is extreme fear. This makes it a rational time to be setting price targets rather than reacting to sharp market moves. In the latest video from Lark Davis, he explains that while the U.S. economy looks strong on the surface, a closer look suggests a potentially explosive setup for crypto. The key is the Russell 2000 index, which tracks small-cap stocks and often signals broader risk appetite. A chart from Max because Bitcoin showed that after the Russell 2000 broke its all-time high in 2020, Dogecoin surged dramatically. Davis presents his own chart showing that the Russell 2000 and altcoin market caps, excluding top coins, peaked and found resistance at nearly the same times in late 2021 and 2024. Right now, both are pushing against a critical resistance level. Adding to this, a custom macro indicator from DeCoJar is flashing a breakout, hinting that a move higher could be imminent. The video lays out a compelling case by connecting the dots between traditional market indicators and the crypto space. The focus on the Russell 2000 as a proxy for risk appetite is a classic take, and its current technical posture is indeed at a pivotal point. As of today, the Russell 2000 is trading around the 2400 level, showing some indecision right below its previous highs. This aligns with the video's observation that it's at a make or break resistance level. The stagflation argument is also becoming more relevant. The latest CPI data for August 2025 confirms the inflation rate is at 2.9%, with core inflation remaining sticky at 3.1%. This puts the Federal Reserve in a tough spot, as the weak jobs data mentioned in the video pressures them to ease policy while persistent inflation demands the opposite. In the latest video from the Ben Cowan channel, the discussion centers on the current state of the Bitcoin market, using the Fear and Greed Index as a primary indicator. The index is currently at a neutral 52, which is interesting because despite Bitcoin reaching new all-time highs, the widespread retail euphoria seen in previous cycles hasn't appeared. Social interest metrics, like YouTube subscribers and followers on X, are almost non-existent compared to prior post-halving years. The video's analysis of missing retail euphoria feels very relevant to the current market. The Fear and Greed Index is hovering around 52 to 53, a neutral sentiment that supports the idea that we're not seeing the extreme greed of past bull runs. This is happening even as Bitcoin trades around $116,000 and institutional adoption is undeniably growing. U.S. spot Bitcoin ETFs have seen massive inflows this year, with major players like BlackRock and Fidelity leading the charge. This marks a significant change from the retail-driven frenzy of 2017. In the latest video from Coin Bureau, the host explains tokenized stocks, a type of real-world asset RWA, that's gaining a lot of attention. You can now trade shares of companies like Nvidia and Apple on crypto blockchains 24/7, often without needing to provide personal information, KYC. These are crypto tokens that represent actual stocks. One token usually equals one share, and its price follows the real stock's price. It's important to know that most of these tokens don't give you a direct claim on the actual share, meaning you can't exchange them for the real thing. The conversation around tokenized stocks is perfectly timed. The real-world asset, RWA tokenization market, has seen explosive growth this year, surging over 260% to a valuation of more than $23 billion. This isn't just hype, it's driven by serious institutional interest. Look no further than BlackRock's BUIDL Fund, a tokenized U.S. Treasury product which has ballooned to over $2.8 billion in assets under management. This shows that major financial players are not just experimenting, they're deploying significant capital. In the latest video from Cryptos Russ, the host talks about the recent dip in Bitcoin's price, attributing it to a large whale selling off assets. This same whale had previously sold 36,000 Bitcoin to purchase Ethereum. The market is also feeling some pressure from the upcoming FOMC meeting, with expectations of some volatility. The host predicts the market might see a downturn before the Federal Reserve's rate decision on Wednesday. On a different note, Solana is showing a lot of strength. Galaxy Digital has made a massive $1.5 billion investment in Solana, signaling strong institutional interest. The host believes Solana is a prime candidate for a future spot ETF. Finally, he announces a personal project. He'll be live streaming himself playing the game Clash Royale on the Pump.Fun platform to test its features and revenue potential. The video's points about market jitters are quite timely. The FOMC meeting is indeed underway, with markets overwhelmingly expecting a 25 basis point rate cut to be announced tomorrow. This decision will likely set the tone for the rest of the week. Bitcoin is currently trading around $116,000, showing some recovery from the whale-induced dip mentioned in the video. Meanwhile, Michael Saylor, who was mentioned in the video, just had his firm, now called Strategy, purchase another 525 Bitcoin for about $60 million, reinforcing his bullish stance. In the latest video from the Crypto Banner channel, the host gives a full walkthrough of the KuCoin cryptocurrency exchange. He presents it as a secure platform, mentioning its AAA security rating and consistent proof of reserves audits. The tutorial covers everything from the initial sign-up and identity verification (KYC) process to funding your account, which can be done by depositing existing crypto or buying directly with a credit card or bank transfer. A key point is the explanation of KuCoin's different account types, funding, trading, and futures, and how to move money between them. The video shows two ways to purchase crypto: a simple convert feature for quick swaps, and the more detailed spot trading interface for setting specific buy orders. It also touches on futures trading, noting the high leverage of up to 125x. Finally, the host quickly goes over some of KuCoin's other features, like the KuCoin Earn program, where users can get a yield on their crypto, and the platform's integrated Web3 wallet for on-chain activities. The video does a good job of laying out the features of KuCoin, which has long been known as a go-to spot for finding a huge variety of altcoins. Its reputation as an altcoin haven is still relevant, especially as market sentiment is shifting towards a potential alt season. The emphasis on security, particularly the monthly proof of reserves, poor reports, is a smart move in today's market. A recent audit in July 2025 confirmed that reserves for major assets like Bitcoin, ETH, USDT, and USDC were all over-collateralized, with backing ratios between 110% and 114%, which provides a layer of confidence. In the latest video from Crypto Casey, she walks through how to set up and use the Tangem wallet, a credit card-style hardware wallet. The setup process is designed to be quick and easy, taking less than 90 seconds. It involves downloading the Tangem app, scanning one of the 3 provided cards, and creating a wallet. Backups are made by linking the other 2 cards to the primary one, ensuring redundancy. The video shows how to add various cryptocurrencies like Bitcoin, Ethereum, and Solana to the wallet's dashboard. A key feature is the ability to buy, sell, and swap crypto directly within the app through integrations with services like MoonPay and Changely. The video also demonstrates how to transfer crypto from an exchange like Uphold to the Tangem wallet and vice versa. It also touches on staking options for cryptocurrencies like Cosmos, Atom at 16.47% APR and Solana, SOL, at 6.47% APY. The presenter explains how to connect the wallet to DeFi applications using Wallet Connect, using Jupiter on Solana as an example. The video also discusses the option of creating a seed phrase for the wallet, noting that this is a less secure method as it exposes the private keys to a device connected to the internet. The emphasis on user-friendly hardware wallets like Tangem is timely, given the increasing institutional adoption of cryptocurrencies. With Bitcoin trading around $116,000 and Ethereum near $4,400, the need for secure self-custody solutions is growing. Recent news highlights a significant inflow of $1.7 billion into U.S. spot Bitcoin ETFs this week alone, indicating a strong institutional appetite. This influx of capital, coupled with a more favorable regulatory outlook, with the SEC and CFTC working towards clearer guidelines, is creating a more mature market. However, this increasing value also attracts more sophisticated security threats, making hardware wallets a practical tool for safeguarding assets. While corporate adoption of Bitcoin has seen a slight slowdown since its peak in July 2025, the overall trend of digital asset integration into corporate treasuries continues to grow. The market is also anticipating a potential altcoin season in late 2025 or early 2026, which could be spurred by expected interest rate cuts. In this environment, the ability to securely store a diverse portfolio of assets as offered by multi-currency hardware wallets becomes even more important for investors looking to protect their holdings. In the latest video from DataDash, the host explains XYO, a project that began in 2018 to make data trustworthy and owned by its creators. It started with proof of location and proof of origin to verify where and when data is collected, preventing fake data. This made XYO the first decentralized physical infrastructure network, DePIN, which has now grown to over 10 million nodes. The big news is the launch of XYO Layer 1, a brand new blockchain built just for handling data. This is important for industries like AI, supply chains, and real-world assets, RWA, that need reliable information to function properly. The video also details XYO's dual token system. The original XYO token is for governance and staking, which helps secure the network and makes the token scarcer. The new XL1 token is the gas for the Layer 1, used for transaction fees. You can earn XL1 by staking XYO. A portion of XL1 is burned with use, which helps control inflation. This creates a cycle where staking XYO earns XL1, driving more activity and demand for both tokens. XYO isn't just an idea, it's an established network that's now scaling up with its own dedicated blockchain to solve the massive problem of data integrity. XYO's launch of its own Layer 1 blockchain is a timely move, positioning it as a serious contender in the rapidly growing DePIN sector. While the concept has been around since 2018, launching a dedicated chain just as the narrative around AI, WAs is gaining significant traction is a smart strategic play. The market is showing a clear appetite for projects with tangible, real-world applications, moving beyond purely speculative assets. With the broader crypto market showing bullish signs and Bitcoin dominance falling, conditions appear favorable for altcoins with strong fundamentals, potentially signaling the start of an altcoin season. In the latest video from Crypto Windio, Parth Karpadia from OpenVP explains their mission to create a decentralized internet for energy. He says they're building something like the plaid for your solar panel, aiming to simplify the messy world of renewable energy for homeowners. The goal is to connect energy production and consumption more directly, cutting out the confusing middlemen. OpenVP is introducing a virtualized meter on the blockchain to create a more transparent and unchangeable accounting system for energy transactions. He mentions that the OpenVP token is currently for governance, but they have ideas for using it in a loyalty program to encourage the adoption of batteries and electric vehicles with rewards settled in USDC. The company has already announced partnerships with A16Z and LCX, and is part of the Circle Alliance program. They are also planning to unveil their app, OpenVP World, at an industry conference in Orlando on October 25th. OpenVP is stepping into a sector that's not just growing, but is also at a critical point of transformation. The push for decentralized energy grids is gaining momentum, with blockchain technology being a key talking point for modernizing our power infrastructure. We're seeing more projects focused on peer-to-peer energy trading and tokenizing renewable energy assets, which suggests a broader market acceptance of the concepts OpenVP is built on. Their timing seems pretty good, especially with the increasing adoption of solar panels and electric vehicles. The current crypto market is showing some mixed signals, with Bitcoin hovering around the $115,000 mark and Ethereum near $4,500, but there's still strong capital inflow into the space through ETFs. This indicates that institutional interest in crypto-related technologies remains high. On the regulatory front, there's a growing conversation around creating clearer frameworks for crypto assets, which could eventually provide a more stable environment for projects like OpenVP to operate in. The idea of a plaid for energy is a powerful one, as it addresses a real pain point for consumers who find the current system overly complicated. If OpenVP can successfully navigate the complexities of both the energy and crypto industries, they could be in a prime position to make a significant impact. In the latest video from The Modern Investor, the host discusses two major developments in the crypto space. First, South Korean crypto exchange KuCoin has rolled out the first Bitcoin staking service in the country. This new service uses the Babylon protocol to let users stake their Bitcoin and earn rewards without having to lock up their funds. This means they can still trade or withdraw their Bitcoin at any time. The rewards are paid out in Babylon's own token called Baby. The host notes this is a big step for making passive income on Bitcoin and is eagerly waiting for larger exchanges like Coinbase and Binance to offer something similar, which he believes will really shake things up. The second piece of big news is about XRP. A NASDAQ-listed company, Wellistix Health, WGRX, is launching a payment system built on the XRP ledger for thousands of pharmacies across the United States. This will allow over 6,500 independent pharmacies to pay for inventory and move money instantly, avoiding the usual delays and high fees from banks and credit cards. The host is surprised this news hasn't created more buzz, given the typically passionate XRP community. He also touches on the general price prediction for XRP, mentioning a target of $12 to $15 for this year. The developments discussed in the video, particularly Bitcoin staking going live on more platforms and real-world enterprise adoption of the XRP ledger, are significant markers of a maturing market. The Coin One launch in South Korea using the Babylon protocol is part of a growing trend to unlock yield on Bitcoin, which has traditionally been a non-productive asset. With Bitcoin's price currently hovering around $116,000, even a modest 1 to 2% yield becomes a substantial passive income stream, which could attract a new wave of long-term holders. The real turning point will be if and when giants like Coinbase and Binance enter the fray, as the host suggests. The Wellistix Health integration with the XRP ledger for 6,500 U.S. pharmacies is a concrete example of blockchain utility solving real business problems, namely the high fees and slow settlement of traditional payment rails. This move gives XRP, currently trading around $3.11, a tangible use case beyond speculation. It also aligns with the broader market sentiment that is slowly shifting from fear to neutral, currently indicated by a fear and greed index score of 53. This is happening as U.S. regulators like the SEC and CFTC are beginning to harmonize their approaches to crypto, potentially providing clearer rules of the road and fostering more large-scale adoption like this. In the latest video from the Alex Becker channel, the host lays out his predictions for a massive alt season starting in the fourth quarter. He argues that the current market pumps are just a small preview of what's to come, drawing parallels to the beginning of the 2020 NFT boom before prices went parabolic. He points out that with $7.3 trillion sitting in money markets, a significant portion could soon flood into riskier assets like crypto as interest rates fall, triggering an explosive rally. He breaks down the key sectors he's watching, starting with large-cap, beginner coins like Avalanche, AVAX, Cardano, ADA, and SUI, for those looking for safer exposure. For decentralized finance, DeFi, he mentions Clearpool, CPOOL, and his own project, Black Hole Black, as major players. The AI sector is another area of focus, with Bittenser, TAO, leading the charge, followed by smaller projects like AOS, Destra, DSTRA, and ZigChain, ZIG. He also identifies emerging narratives in real-world assets, RWA, highlighting Chainlink, Link, and Auto, and the new robotics sector with modular MDR, and Robox, RBR. Finally, he sees big potential in gaming, tipping Superverse, and Beam, for major gains. Alex Becker's forecast for a Q4 altcoin rally taps into a growing bullish sentiment across the market. As of mid-September 2025, Bitcoin is consolidating around the $115,000 to $116,000 mark, with many analysts eyeing a breakout towards $130,000 by the end of the year, supported by strong ETF inflows and anticipated Federal Reserve rate cuts. This macroeconomic shift is central to Becker's thesis, as lower yields on traditional assets could indeed push trillions from money markets into crypto, providing the fuel for the explosive moves he predicts. In the latest video from the Crypto Jeb channel, Jeb explains that Bitcoin's recent sideways movement is a healthy and expected correction. He points out several bullish technical indicators, including an inverse head and shoulders pattern, a bullish MACD cross, and a strong RSI. Jeb believes this consolidation is setting the stage for a significant upward move. He predicts that a likely Federal Reserve rate cut will further boost the market. His price prediction is for Bitcoin to hit $127,000 soon, break its all-time high in October, and potentially reach $130,000 to $150,000. He also mentions that after Bitcoin's rally, he expects money to flow into Ethereum and then other altcoins, with Ethereum potentially reaching $6,000 to $7,000 and Cardano hitting $1 to $3. The video also notes the recent large inflows into Bitcoin ETFs as a strong sign of institutional interest. Jeb's bullish outlook on Bitcoin is supported by several current market factors. The anticipation of a Federal Reserve rate cut on September 17th is creating a favorable environment for assets like Bitcoin, with markets widely expecting at least a 25 basis point reduction. This sentiment is reflected in the significant inflows into spot Bitcoin ETFs, which saw over $2.3 billion in a single week, indicating strong institutional confidence. Currently, Bitcoin is trading around $116,000, holding above key technical support levels. The technical analysis presented in the video, such as the inverse head and shoulders pattern, aligns with the current market sentiment of a potential upward trend. The prediction of a subsequent altcoin rally, particularly for Ethereum and Cardano, is also plausible as profits from Bitcoin often rotate into other crypto assets. The recent performance of Ethereum, which has been hovering near its all-time highs, and the breakout of Cardano add weight to this possibility. However, the market is still subject to volatility, and any unexpected moves from the Federal Reserve could alter the current trajectory.